Is gold becoming the new Apple? Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your daily update for the major markets. As we come to the end of the week, and more importantly, the end of the quarter, we see gold closing at its highest levels ever on a quarterly basis. So it begs the question, is gold going to become the new Apple for investors? We think so. And with all of our indicators positive on gold, we believe that we will see this market continue its upward trend for the next several months. We would not be surprised to see gold break over the 2,000 level, that magical level 2,000, by the end of the year. It looks like the S&P 500 is also going to have its best closing quarter in 19 months. We would not be surprised to see this market goosed up on the close as it is the end of the quarter. Now let's go to the major markets and see what's going on with our trade triangles and what they're saying about those markets. But first, I want to bring your attention, you Forex traders out there. Market Club has real-time Forex prices, which is really cool. And also, here's a Australian dollar, New Zealand dollar. This is a pivot point. And also you have what we call our twin peaks. So again, huge move. We're going from 27 to around 30. So you should be looking for a move right down to around 24. And the target zone is 25. Right now, 125.08. So maybe one big handle lower, and that should probably do the move on the downside. But all the trend is down. Strong downtrend for the AUD and ZD. That's what they say in New Zealand, Z instead of Z. So let's clear the screen and go to our portfolio. And let's start looking at some of these markets, because we do have some interesting markets right now. And as you probably know, we've got all the problems, all the people saying bullish, bearish, total conflict, but we rely on our trade triangles. And as you can see, 85 is a bullish market in the indices. As we said at the top of the show, this market's closing at its best levels in 19 quarters. It's huge, 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 huge. So let's see how this market looks technically. We've come back down to the midpoint of the Donchian trade channel, which is right here. We may see another push down, possibly to the 1425 level, which is right around these levels right here. And I think that would be healthy. And it would also indicate that it should find support there, because this is where we had this sort of level right here. So that should basically provide support. Our trade triangles on the monthly and the weekly, all positive. That's a bull market. So we're looking for this market to move higher and go to the 1550 level. Yes, I know it's a long way from here, but that's what the technical tools are telling us right now. It's not to say it's guaranteed, but that's certainly what we're looking for. Going right along now onto our next market, that's going to be the Dow. The Dow actually made a new low, but came back. So we think the market's just going to consolidate. And again, we've set ourselves up potentially there for a bullish divergence. There's the market going like this, and we're not making new lows yet. So let's see how that works out. But generally speaking, this market, again, monthly, weekly, all positive. So we think that's going to see this market do much better in the months ahead. So maybe if the election is going to kick this off, I don't know. We'll have to see how things play out there. So let's just clear the screen again, go to our next market. And the next market we're looking at is the NASDAQ. So what we do with these segments is look at the big markets, then we look at the individual markets inside there when we have time or instant analysis. So here we are. This is the NASDAQ. You can see we sort of come down. Really, it's still doing very, very well. And if you look at this on a quarterly basis, one of the cool things about Market Club that I love is the fact you can look at these markets on a quarterly basis. And let's just do max. And you can see this is going to be, let me just make sure I've got this right. That was, close was 3. Yeah, this is going to be the highest ever quarterly close since we've been tracking this since 04. Now, obviously in 2000 it was much higher, around 5,000, but nonetheless this is not a bad thing to see this market do this today. So again, the pattern looks positive for us to go higher. So let me just go back to my daily chart, and our next market we're looking at is going to be crude oil. Now, crude oil is very, very interesting in our book. We've come back down to the 90 levels psychologically. We had the little bullish divergence we told you about in our comments the last day or two. We've sort of seen the rally, and there's the bullish divergence. And we sort of seen the rally here a little bit. But for the week, this market's very, very, very basically unchanged, given the fact that these markets are pretty volatile. So I think want to watch this market very carefully. Want to watch the PSAR, that's the parabolic SAR, stop and reverse. If that kicks in, I think we'll see this market jump and go higher. So let me just clear the screen just a little bit. In fact, actually this has already kicked in. The PSAR has already kicked in. I said that in my comments. So it's made a move. So it looks like we put a bottom in, at least for the time being, in this market. And we may have to wait until next week. But we may see even a rally later today. So let's go on to our next market. This is the euro. And the euro dollar, I put some lines in here already to show you what we're looking at. So let me get a little bit closer, 3 months. And you can see right here, this is the Fibonacci lines we talk about all the time here. There's the 38, there's the 50, and there's the 61. Now, 127.36 is a 61.8% retracement on Fibonacci right there. That also coincides with the long-term trend line, and I'm just going to draw this very closely by freehand. That should be an area where the market should find good support. Also, you have a little bit of a divergence going on. We need to see this turn up a little bit. We may see a new low here, and for this market to turn up on the on the Williams percent R. If it does that, then we've got the turn. But right now, if I clear the screen and I put our trade triangles on, you can see we've got a little bit of a thing going here. Yep, there it is. We got the monthly and the weekly positive. That's an indication of a bull market. So it's plus 65, indicating that we're in a trading range, at least in the short term. And that's the tool you want to use, is the Williams percent R indicator. It's a very, very good tool for that. But generally speaking, let me just clear the screen a little bit here. And just take this off, clear it up. You can see we've actually seen a turnaround with the PSAR. So it looks like we may have already put the low in, yet I'd like to give it just a couple more days. And I'd certainly like to see our week daily triangle go green. So let's see how that plays out probably next week right now. So let's see what comes out of Europe over the weekend. So next market is gold. This is the big one. And I want to show you something. This is, here we are currently trading at 1771.40. Really has done extremely well. And you can see yesterday was the highest close you've had in gold for quite some time. And if we go over 1780, perhaps later on today, everything's possible in these markets. I think this will be very, very bullish. But if we go to a quarterly chart, and this is what I want to share with you. This is looking at the big picture. And we just do a simple line chart. We go to max. And we just take some of the studies off. We don't need these studies here. And just take this off. Look at this, is from 2004. This has just been like one easy trend. Now, if you look at other markets, this is just like, this is gold, and it's quarterly. Okay, so you can see, I'm going to write that down. Okay, so it's a line chart, gold, and you can just see this trend is just boom, going up. Now, if you look at some other markets, let me just give you a comparison so it's fair. Clear the screen, and I'm going to go back to my portfolio, and I'll just let's just pull the S&P 500, and let's see how that's performed over the last 8 years. You can see it's pretty much flat, really not a lot of change. So whereas you've had gold has just been straight up, well, let's say straight up with some hiccups there, but on a quarterly basis, it's just gone straight up, and whereas this market's really been flat, it's been pushing up obviously higher, and as I said, this is going to be the highest close we've seen on a quarterly basis in the S&P 500 since, gosh, we have to go all the way back here to 2008. So nonetheless, it's a big, big time. Let's go back to our portfolio and go to copper. So obviously on gold, we're bullish. So let's go back to copper, and here's the copper chart. And this is a quarterly again, not as good as gold, obviously, but let's go back to our dailies because that's what we want to look at right now. So here's the daily chart, and we're still bullish on this. If you may remember, we've been looking for this market. We thought the formation here was pretty positive in the sense that it was more of a flag formation. So this kind of pullback like, oops, that's not what I want. So this sort of pullback we've seen here was more of a flag formation to push this market higher. That's the sort of the flag, what they call the flagpole. And we need to see this market probably go over the 3.80 level. If it goes over there, this is the December contract for copper. If it goes over there, then I think we'll get a good shot at pushing this market up and make new highs. So let's just clear the screen and go to our next market. And the next market we're looking at is going to be another big market, silver. Actually, silver is very, very well, doing very, very well. Now, we're practically unchanged for the week. If we look at our weekly charts, which we can do very easily on MarketClub, you can see, look at this. We closed last week in silver at 34.41. We're 34.41. You can't get any closer than that in terms of a week. So all week, if you went home short last week or long last week, you've just pretty much even for the week. But it looks like the market's beginning to pattern out, build a base, and wants to go higher. So let's just go back to our dailies. And again, there, 35 is a big level. If we close over 35, I think we're off to the races. We'll see this market go much, much higher. Again, we've got a very good energy field that came from, and I think we could easily go up and challenge the recent highs of 37 all the way back in March of this year. So let's see how that plays out. Next market is going to be the CRB Reuters Jeffries Index, and I want to just put our tools back on that we talked about here, our Donchian trade channels, which I love, and also the parabolic, the PSAR, that was developed by Wells Wilder in the 70s. So it's been around for a long time. It's definitely a good tool, but here's what we're looking at. The market came right back down to the 305 level, which we expected it would do. It's found support. It's bounced back up. Now, the very, very big key level in my mind here, and I want to keep emphasizing this until we see it broken, is this level right here. This is the 320 level. If we break this area here, we basically do two things. One, we move into new high ground, and two, we break a long-term trend line that goes all the way back to the very beginning, the highest we've seen this, and that's back several years. So if we do that, then we'll see this. In fact, let me just show you rather than just try to illustrate it visually. So what's the best way to do things? So let me just go back here, and we'll just go back. So, and we'll take everything off the screen. And let me just take some of the Donchian trade channels and also the parabolic, and you can see we just put a simple line chart on here, and we got a trend line going from the highs. That's what we're looking at, and that's pretty amazing. So you can look at, if you don't, obviously maybe you want to hear our analysis during the week, and if that's, or during the day or night when we're not actually here. And if that's the case, you may want to just listen to our commentary right here with our Talking Chart Technology. The plus 55 chart analysis score for this market indicates that we are in or soon will be in a trading range with no definable or steady trend. A sideline position is best at this time. Okay, so there you heard it, and we do this all the time on over 300,000 symbols. You can just click on this little audio summary, and we give you a technical audio summary of every market. But this is the key thing in my mind. If we see this market, so this is a classic trend line that goes all the way back to here, and this is July of 2008, so it's like a 4-year trend line. If we break over this level here, Katie, bar the door, because inflation is going to hit big time, and this market's going to take off. First of all, it'll challenge this level here, the 360 level, and then later it'll challenge this level, and that's the way they're going to get out of this current morass, and that's to inflate us out of problems. Not a good strategy, but that's what they're using right now. Hey, this is Adam Hewison. Have a great weekend. Thanks so much for listening to our broadcast. We appreciate that. Every success using the trade triangles. And we'll see you on Monday. And obviously, we'll have all the news for you there, what happens over the weekend. So have a great weekend, everyone.